All right, ladies and gentlemen, hello and welcome back once again to the only coast to coast radio show that's all about the information economy. It's time for Inside Analysis. Yours truly, Eric Kavanaugh, is here. And folks, we're going to dive into a meaty topic today, my friends: anti money laundering and agentic AI. Where do these two things meet? Do they meet? How do they meet? How big a deal is this these days? Everything is digital. Massive amounts of money are flying all around the planet all the time. As many of you know, I spent years in the world of risk management where anti-money laundering, or AML as they call it, is a big deal. There's also PEP, politically exposed persons. That's an interesting one. Fraud detection obviously is big in the banking world. So how big a deal can agentic AI be? How much can that help? What is it compared to traditional automation and rules-based systems? We're going to talk about all of that with our guest. We have James Freis, or Jim Freis, and David Caruso with us today. Maybe just do some quick introductions for yourselves. James, I'll throw it over to you first. Tell us a bit about yourself and what you're doing at WorkFusion.
Thanks very much, Eric. It's great to be here today. So, in the anti-money laundering space, I'm mostly known as the former director of FinCEN, the U.S. Treasury Department's Financial Crimes Enforcement Network, which I led for almost 6 years, which is the nation's leading anti-money laundering regulator and what's known as the Financial Intelligence Unit of the United States, supporting law enforcement investigations and eventual prosecutions, especially focused on money laundering. But my career has been in financial services regulation. Started the first decade as a central banker, learning how money moves before they asked me
Wow.
to come into the Treasury Department and help see how people abuse the use of money. And then I went back overseas afterwards with Europe's largest provider of financial market infrastructures, the Deutsche Börse Group. In the past few years, I sit on the board of directors of a number of banks and work together with a range of different financial service providers and IT companies looking at innovative uses of technology.
That is very, very cool. And thank you for your service, by the way. That's a pretty intense job. Imagining you had a few nights where you're staying up a little bit late, wondering about things. But
And I've
thanks for
seen a
your.
few scary things out there.
I
Yeah.
can imagine. I can imagine. Goodness gracious. And David Caruso from WorkFusion, tell us a bit about yourself and what you're working on these days.
Yeah, Eric, it's great to be here, and it's good to be here with Jim as well. So, my background, I started my career off as a Secret Service agent way back in the 90s. That was my introduction to investigating financial crime. Secret Service was part of the Treasury Department back then. After doing that for a few years, I moved into what's now known as the anti-money laundering industry. I was an anti-money laundering officer at a bank in Washington, Riggs Bank, which about 20 years ago sort of kicked off a lot of the regulatory issues around AML. I ran a consulting firm for a number of years in which I helped financial institutions that were under the microscope of Jim and his agency to help them remediate a lot of issues. So I helped a lot of banks build programs, and then left that in the about 10 years ago and ventured into the AML software, or sometimes as it's known, RegTech space. So that's where I sort of dove into information technology, software. And so now I'm sort of combining all those things. And at WorkFusion, we are an AI, agentic company that's focused in on the financial crime space. So,
Okay, good. And we all want to track those folks down. James, or Jim, I should say, I'll throw it over to you. Yeah, anti-money laundering requires a whole bunch of tumblers to fall in line. You have to do identity resolution. You're really doing a lot of pattern recognition and on behavior. So you have to be looking into lots of different systems and seeing, what is this behavior I'm seeing where somebody goes here and then it goes there, then it goes there, then it goes here, then it goes there, then it goes there. And you look for patterns in that behavior. And once you find those patterns, that can get you some signal to say, maybe there's something dubious going on here. But it's hard to get access to all that data. Can you talk about the challenge of having the right data and then having the right rules to be able to find these things and then being able to do something about it?
So those are good ways to tee up some of the challenges that we have in anti-money laundering. I guess maybe stepping back for a second, the issue in terms of what's the driver, the root cause of this, and that is that most criminal activity is driven by money,
Yeah.
right? You may have some crimes of passion, like a barroom brawl that breaks out, but ultimately it's usually driven by money. And money laundering is all about hiding the source of those funds and taking illegal proceeds and trying to use them as if it were clean, hence the words that we have, money laundering. And one of the challenges they have looking at it from the financial industry side is, take a classic example, a drug dealer, after selling drugs on the street, comes in with a bag of cash and wants to deposit it at the bank. Commercially speaking, that's pretty good credit risk. Like, you come from a credit background, there's no credit risk. And money launderers actually will pay higher amounts of fees, no questions asked, than average people. So the point that I'm making there is that there's not a natural incentive to push against the money launderers, and you hear a lot of negative sentiment sometimes in the industry. And again, speaking different from David and myself, who started our careers in public service and had a reason to go into that path, the aspects of many of the regulatory requirements are deemed as burdensome to the industry, because in fact, it is the case that with the privilege of offering a licensed financial service, you're asked to make it harder for bad guys to abuse your services. That's what it's all about. And what comes down to, as you said, is the identity. So the first aspect is using false names or corporate functions. And then the second aspect is the type of activity that you're involved in terms of the patterns. But a big part of that is what is normal for one person is not normal for others, or for a peer grouping of persons. And most of the activity that you'll see with at least retail level money laundering is opening an account, moving funds, and closing it right away. So you can never actually create a profile or what is a normal or a baseline pattern. And then the last thing I'll just say with that, as you correctly said, in terms of data, any one financial institution only has the information that's available to them. When I was within the government, we had massive amounts of data to us, and we just went through a massive 5-year process under my leadership of rebuilding our IT capacity to better utilize that data. But financial institutions have to make judgment calls based on, at best, seeing one side of the transaction. In the classic sense, I transfer from my institution to yours, or receive from your institution, but they never have both sides of that picture.
Yeah. And that's the problem, because it's like seeing with one eye. You can't get any depth perception, so you don't know when something's coming at you or how fast it's coming at you, I guess. Very, very cool stuff. David, I'll throw it over to you. I think he set the table pretty well there. It's a big challenge. So, how do banks reasonably approach this, and other institutions, of course, from a technology perspective, understanding that it does feel like a burden. And well, I'm in the data world, and data governance always felt like a burden. It was like, leave me alone with your data governance stuff. Just give me my data. I don't care anymore. We talk about AI ethics these days a lot, because guess what? There's a lot of curious activity happening in the AI world, training these models with copyrighted data, things of that nature. But in money laundering, it's a very complex problem. It can be very, very painful, especially if a guy gets away with it many times through your financial institution. Well, how do you help your clients better understand what should be expected, what's plausible, and what are some things they can do in terms of basic blocking and tackling, David?
Well, Jim brings up a great point that, yes, financial institutions have the view of what's happening within their organization. Now, there are some rules actually that were passed in the Patriot Act. A lot of people think of the Patriot Act as having, lots of different functions that impact Americans. And one of them is it required banks to improve AML programs. But one of the great features of the Patriot Act is it does allow banks to talk a little bit about activity that might happen between them. But overall, Jim's right. And so what banks rely on are what are known as transaction monitoring systems. I mean, they're just software systems. And most of those systems are, they've been around for decades, so they're more rules-based. So to answer your question, Eric, specifically, there are general rules that these systems and the banks follow to identify suspicious activity. I mean, there are simple ones, Jim mentioned one. If you have large deposits of cash followed by immediate act, like a wire transfer out to a country that's known to, be involved in narcotics trafficking or money laundering, that's a simple rule. And banks are responsible for filing, suspicious activity reports on that. But I think we would all agree, even, those of us in the industry and those who just might be hearing about it for the first time, it's easy to catch the dumb guys, but we're not, however many billions or trillions of dollars a year are laundered, it's not all done by the dumb guys. So there is a lot of sophisticated movement of funds, certainly cross-border, a lot of, international activity. And you can do it through investments, you can do it through real estate, you can do it through precious metals. And so yeah, there is a real challenge to how to better detect this, and that's where maybe AI and better systems can help.
Hmm. Well, the unblinking eye of machine learning, of systems that can scale out and monitor highly complex workflows, that's here now. And maybe, Jim, I'll throw it over to you. You talked about kind of upping the IT infrastructure in your last in your work. Can you talk a bit about that? I mean, maybe not get into specifics of this technology or that technology, but the fact is that we can now pattern detect and run compute at levels that we could not have done 10 years ago. I mean, it's really night and day. How big a deal is that from your perspective, and what have you seen?
It's a huge deal, and it's a game changer, both in terms of what fraudsters are trying
Right.
to do. So I'll keep coming back to fraud because I think that is one of the easiest examples to work with, but use just the basic aspect of some type of phishing scheme. I can generate additional emails or voicemails or texts at almost no cost. And one of the benefits I have with generative AI is it can make them more personalized than I would have in the past, especially when I can buy and download on the dark web most information, including passwords and information about people's personality. So you can generate lots of these fake emails at almost no cost, and you only need a couple people to fall for them to share their passwords and then get into their account. So that's one of the ways that the risk is increasing, but the ability to challenge some of that, there's ways that the software can get across indicators that we couldn't even have imagined only a period of years ago, such as most people have as part of the transaction monitoring software and the like. You look at the login criteria, you look at the VPN or the IP address, whether you have a device that's commonly used. But the more modern systems can look at whether mouse movement is someone that's right-handed versus left-handed, or if you have a type of delay that suggests that there's a masking of the VPN, that you're not sitting there in Pittsburgh, that you're sitting somewhere on the other side of the world in those nanoseconds of delay. So those are the ways that, again, both the fraudsters, the bad guys are trying to use new systems, but the software and the capability to look at it is changing. But I'll mention one aspect that I think David and I can help elaborate on more throughout this conversation, and that is of all of the trends in the industry. One of the biggest ones is the movement in the customer demand as well as the financial services model to deliver it, expectations for real-time payments. And
Wow.
traditionally, things took time for payments to go through. If you deposited cash, it'd be under a hold for a couple days in the bank. You deposited a check, first you had to write it, send it through the post, and it needed to be clear. If you wired funds, it took time to get it through. Part of the time, in addition to float and aspect of being to the benefit of the financial institution, was it gave the opportunity to run different types of transaction monitoring, not just on the individual transaction, but against different data sets. And that compression of the period for real-time payments removes some of the margin for error for us and changes the notion of ex post transaction review to real time. And just one example of that, a lot of the anti-money laundering typologies will involve an aggregation of data. So meaning that one transaction in and of itself is not suspicious or abnormal, but it's only when a few come together. So by definition, you have to wait until you have that second or the third or the fourth or the thousandth in order to have a profile. That means you can't have stopped the first one based on at least that monitoring rule.
Right. Right. No, that's exactly right. You bring up a whole bunch of good points here. And, I'm reminded of my first job when I was still in high school. Actually, I worked at a bank. And I can still tell you right now, black now, red T, F5 key for a checking deposit. I still remember because it was ingrained in me. And you're right that like a personal check, you'd hold it for, yeah, typically 7 days, but back in the day, it could have been 14 days. And a corporate check would be like, all right, 2, 3 day hold, something like that. But to your point, like it was not instantaneous, and now it is. Now people with Venmo and Cash apps and all these things. I mean, I have to think that when all this broke out, and we'll pick this up after the break here in a second, but a lot of the anti-money laundering people were like, "Oh no, I now have all these other components in the workflow to worry about. I have all these other systems to monitor." Now, granted, they can monitor, so they're now a financial institution. They have to kind of watch all the behavior, and they're probably a tremendous source of information to train models that can then look for that sort of thing, right? So if you're in the Cash App world, if you're in the Venmo payments world, whole lot of money moving all around all the time, and like lots of connections, and of course you opt in to show your friends and all this other kind of stuff. So I'm just guessing here, and we can talk about this in the next segment, that there's a lot of insights that can be gleaned from that environment, that you can build models which can then be applied to different organizations or different geographies. I mean, you get too far outside of a geo and things do change in terms of behavioral norms. But here in the United States, pretty big country, and there are ways that you can ascertain signal from all that information and then use that to deploy in your models or maybe in your agents to learn from what others have learned. But folks, don't touch it. That will be right back. You're listening to Inside Analysis. All right, folks, back here on Inside Analysis, yours truly, Eric Kavanagh, with Jim Freis and David Caruso. And David, we were just talking there in the last segment about fraud and the challenges. And I'm thinking to myself, Cash apps and Venmo. And, like I remember when Western Union was the big deal and you'd have to go to the store and like call in and do all this stuff. And like, okay, then you get your money. And then it was money in a minute. It's like, wow, that's crazy. Now everyone can do this. Trying to get money to my friend in Austin. He doesn't do any of that stuff. I'm like, oh, dude, do I have to actually write a check and mail it to you, or like, what's going on here? But hey, different strokes for different folks, right? But David, what do you think about gleaning insights from these kinds of systems that you can build models with, and maybe even build agents with? What do you think about all that, David?
Yeah, I mean, Jim brings up a great point that the consumer expects everything is, instant in front of us, whether it's financial movements or not. So I think for traditional financial institutions, this is a big change, particularly, I think, financial institutions, when they transfer money, they used to be called something like T+2, meaning, the settlement happens 2 days after the transfer. Well, as we move to T+0, meaning it's got to be instantaneous. So as far as in the financial crime world, as Jim also mentioned, I do think that the fraud aspect of the financial crime world is probably ahead of the anti-money laundering aspect. And the reason is because with fraud, you have organizations that will be losing money, financial institutions, marketplaces like Amazon or eBay. So they have a much greater incentive, Eric, as you suggested, to identify these characteristics that are indicative of like an account takeover, for example, that type of fraud, and all the litany of frauds. And because a lot of these types of transactions are happening on platforms, there's just enormous amounts of data to gather, like Jim said, from mouse movements to slight nanosecond delays in VPN connections. So there is there's a rich well of data that developers can use to create machine learning models about what is indicative of these types of frauds. And so but that is a little distinct, or that maybe even more than a little distinct from AML, which, as we've alluded to, is sort of after the fact. You might have to build evidence through multiple transactions. There might have to be lengthy investigations about, when did this person become a customer? Who's this money going to? What do we know about that person? So there are machine learning models being built in that space as well. But in the fraud space, like most things in life, it comes down to incentives. And those organizations who, are victims of fraud have a much greater incentive to build modern computing models that can, detect this stuff, obviously, before the frauds happen.
Right. Yeah, I mean, to your point, David, anti-money laundering, and Jim said this as well, it takes a period of time, and you can't act on that until you have enough of a signal. But, there are still concerns. I mean, there are concerns that you might come along and accuse someone improperly, and then that was a big client of yours. And they're like, well, to heck with you, I'm out of here. You don't want to lose your big clients either. I guess it's nowhere near as prevalent as in traditional fraud. I guess it's false negatives, right? When I'm trying to remember from my days of talking about that. When you go to the store and they're like, bing, no, your car was declined. Like, okay, let's call Chase Bank. Yes, it's me. I always get frustrated because it's like, I was just down the street. Don't you guys have a system monitoring my geolocation or something? I mean, what's going on there? But still, the penalties are severe. And it's when the regulator shows up and knocks on your door, David, and you have not done enough. So I think the key is that you have to have a plan in place. You have to show which technology you're using, how you're using them, what your process is, right? At the end of the day, it's all about what's your process for detecting this stuff and what's your process for getting remediation, right, David?
Right. Right. And in the anti-money laundering regulatory world, that is, whether it's fortunate or not, that won't pass a value judgment. If you're at a financial institution and you're running an anti-money laundering program, you're designing that program to withstand the scrutiny from the regulatory agencies. Now, ideally, the plan you've developed, you're following, the regulators are scrutinizing you on, will be the system that will detect the money laundering, will make those reports to Jim's old agency, FinCEN. There's a lot of debate about whether that's actually true, and if all we're doing is following what regulators are asking us to do, are we actually detecting money laundering? That's a topic for another another program.
Interesting.
Yeah, so organizations are designing programs that follow the rules and regulations. They do incorporate, the practices that are seen to be successful. And more, they have to begin to really, I think any organization that's saying to themselves right now, we're beginning to think about machine learning or AI, I suggest you're already behind. I mean, these are things that you should be testing and maybe having already implemented at this point.
Right. Yeah, Jim, I saw you smiling and nodding your head there. So you're agreeing that these organizations need to embrace this next wave. And what do you think that looks like? Because a lot of people are talking about agentic AI. Of course, there are all kinds of AI out there. AI is not
Mhm.
new. There are all kinds of different models. And I try to explain to people deep learning modules can be designed any of a billion different ways. I mean, there are so many ways that you can design different inference layers, ingest layers, what you train it on, how you train it, how you remediate it, like all these things. Like, so these are all different animals that we're talking about. And agentic, it seems to me, an agent must be at least semi-autonomous. It must be able to make decisions. Some of the cutting edge stuff talks about beliefs, desires, and intentions, and how these guys have their little worldview, basically. And then you have to orchestrate that. But from your perspective, what would you suggest organizations embrace or look into in order to better their own chances and get with the program here? What do you think, Jim?
So I think, like David said, there's been experimentation and some levels of adoption here. It has to be understood that for most financial institutions, they're relying on external systems. There's only some of the the biggest players who can really afford to develop their own monitoring systems, and in particular the integration across their individual products and services. But most are using third-party providers, and they have already walked through aspects of robotic process automation, right? It's very manual process to intake each and every new customer, to do the customer information program, name, address, date of birth, social security number, and then verify those, search against the driver's license that they're doing, right? Those are things that can be done through serial manual processes. But now, as you're talking about the agentic aspect and what I'll talk about in kind of an iterative process, it's building upon this aspect that David mentioned. It's querying. So you can have some type of transaction or series of transactions that, just as in an LLM model, prob probabilistically, to use a long word,
That's it.
but it's a
You got it.
probabilistic model that will say this is outside of what would be the expected
Mhm.
range. And then the question comes back, well, is it something that I can explain? And to me, this is what the agentic AI is doing beyond the robotic process automation or the machine learning. And that's a type of tuning, if you will. We like these alerts, we don't like those alerts. This is more of what we're looking at within thresholds, to actually going back and pulling more information. It
Mhm.
can be when you automatically requesting more documentation
Mhm.
from a customer under a series of matters. It could be going out and checking against profiles. It could be initiating this request. I don't think we've seen much of it. I haven't seen much of it that's fully done on an AI process, but David alerted to earlier 314B, the section of the Patriot Act that allows you to request information from the counterpart, the other bank, whether they have more information. But these are the type of steps that a human is doing, but you could see an agentic AI doing those steps, making decisions as to what's needed more, and going down to the aspect of bringing about a determination. And
Mhm.
maybe one other aspect that I think is critical, coming back to your point of the false positives, rules-based typologies tend to be easy to explain and fairly well established, but they do lead to a lot of false positives. Just to give you a couple examples of the most common rule-based situations. If you see a many-to-one situation of people sending smaller values of money on a repeated basis back to one central place, that could be the drug kingpin is collecting from the people that are out on the streets, or
Mhm.
the drug kingpin has divvied up cash and asked them to place that cash into individual accounts or other products and then transfer them back to the center.
Mhm.
It also happens to be the way that a landlord collects regular deposits from the tenants on a
Right.
monthly
Right.
basis, right? Maybe they're now ACH, but they used to be done in checks, some in cash and the like. Or large round value payments are something that triggers, based on the correct common perception that a commercial invoice is usually not for a round dollar amount.
Right.
Certainly after you add on fees or taxes or VAT if it's overseas. Um, but there are certain transactions, such as if you're doing a foreign exchange transaction where I'm selling $100,000 for 92,000 euros. It's by definition a round dollar on one side. Or if you're doing a securities transaction, the company will fund into an account the 10 million, but then the dividend payments go out to all the retail
Mhm.
investors. So you need to take the rules break down if you don't put them into context, and add a lot of false positives. But this is where the agentic AI can come and say, okay, it triggered my rule, the many to one, the one to many, the large round dollar. But in the circumstance of this pair, this transaction, this history, this peers are the ways that I could explain that as being false.
Right. No, those are all excellent examples, David. Maybe I'll throw it over to you for commentary because
Yeah.
I think that's a very, very good series of points that Jim just made. Go ahead.
Yeah, Jim brought up a couple of great topics there, and let me build upon that false positive. He's absolutely right. What's burdened financial institutions for the last 2 decades are examples like Jim just described, that false positive. And while I do believe that AI will get to what Jim mentioned at the beginning of his comments, which is sort of more of that deep investigative research, where now the greatest value for financial institutions is in their AML programs is that the agents can work those false positives, to use the parlances. And so that means you don't have people who have to follow these sort of routine, rote, repetitive tasks. And many people in the field in AML, unfortunately, most of their day is taking up with doing those false positive resolutions. So if you can have the agents doing that, you're going to get those human beings now focused in on things that matter more high value work. In this case, it would be arguably actually suspicious activity, actual money laundering, doing those doing that deeper analysis that right now, frankly, many in the industry simply don't have time for, because in the course of their day, they have to get through all of these matters. In 7 of their 8 work hours are spent getting through the false positives. They have an hour to do what we would all agree would be more productive work. But if we can get them to be doing 5 or 6 or 7 hours a day of that productive work, I mean, that is a significant change for AML compliance and hopefully actual detection of money laundering.
Yeah. Wow. Excellent points. We're coming up on our next break here, but my brain is kind of simmering here. We do have a couple questions from the audience that we'll try to get to in the next segment, but I'm just going to throw out a little idea here and let our guests think about it for a second. One of the downsides, if you will, of these large language models is that they are probabilistic, and it's because it's a lossy process. We've talked about it. You're taking text, converting it to vectors, and then crunching it and then converting it back to text for the language stuff. Same thing for images. That is a lossy process. You're going to lose fidelity. But I will say, and also some of the bigger names I know, bigger brains in this industry will tell you, we don't really know how these things work. But that doesn't mean they're wrong, and it doesn't mean they're right. And I would suggest, we'll talk about this in a moment, that sometimes some of the better models will find things that no human ever could have found. But we'll talk about that after the break. We'll be right back. You're listening to Inside Analysis. All right, folks, back here on Inside Analysis, talking to Jim Freis and David Caruso. Excellent guests here, big experts. We're talking about black boxes, Jim, and I saw you smiling. What are your thoughts about the black boxes called LLMs? And like most deep learning modules, are black boxes or have historically been? Go ahead.
Exactly. So that's one of the challenges and the aspect of financial institutions trying to demonstrate that they're taking reasonable steps to first detect and since changes to the law to try and prevent to prevent money laundering, their anti-money laundering framework. And because the institutions are relying on various type of transaction monitoring systems already, before we get into the AI, the most wrong answer you can give is, why did you make a specific decision? Why did you report something? Why did you decide to open an account or not open an account? Because the black box told me to, the machine told me to. That's what the spit out answer was. So that was already the framework going
That's
in.
funny.
And now if we say, well, I can rely more and more on different systems that use different AI capabilities, that aspect is more and more of a risk if institutions don't do it correctly. That being said, I think especially what we've seen now in the past 2 years with LLMs, the ability to generate an explanation
Hmm.
in a very clear text and even summaries of
Right.
that, as we know, to put the executive summary at the top as to why they went there, the ability to integrate all different languages with an extremely high rate of credibility with it is something that enables us better to explain the result. And
Mhm.
frankly, one of the reasons why anti-money laundering is so hard for financial institutions is that risk return, traditional finance, when you make loans to small businesses, you expect each and every one of those loans will be repaid. But a portion, even in good times, when the economy is going well, are not repaid. You have to write off the non-performing loans, retail, wholesale, commercial. It's always the case. And you can assume that into your pricing and your overall profitability model. It's not something that you can make a decision, however, in the boardroom or the management room to say, well, let's just assume and price into our model that 1% of our transactions are by money launderers or in modern risk profile will be
That's funny.
fraudsters in phishing or will
Right.
be evading Russian sanctions
Right.
regulation. You can't make a positive decision on that.
Right.
It's a somewhat of an aspirational standard, and a lot of the enforcement actions have the advantage of 2020 hindsight.
Hmm. Wow. That's a great point. That's a really good point. David, I'll throw it over to you for commentary. What do you think about all that?
Um, yeah, it is interesting. I couldn't imagine a board laying a goal for how much money they'll launder this year. But on to the black box. That is, I think, is one of the things that keeps financial institutions, uh, well, it gives them a lot of pause. So I don't want to say it prevents them, but yes, explainability, the ability of an anti-money laundering or AML officer to explain to, well, just their CEO board of directors, but just as importantly, the examiners, how is this new machine, whether we call it AI, whether we call it models or agents, how is it making that decision? So, a term I've heard in the past year that I love is we need to make it a glass box, right? There needs to be real explainability for how these decisions were made. And so that's where I think, and I don't, I sometimes or oftentimes think about what is the future of that AML investigator at a bank. And I've sort of landed on this notion that maybe every investigator will have like an investigator buddy, and that
Hmm.
buddy will be the AI.
Hmm.
But ultimately, when it comes to decisions about whether or not the file is SAR or not, it is going to require a human review. It
Hmm.
doesn't mean that a human has to redo the entire 4 or 5 hour investigation, but someone at that bank, a skilled, experienced investigator who has sound reason and judgment, can look at what the AI produced, can do spot checks on, like, are these the transactions that occurred? Are these the dates on which they occurred? So some sort of QC process, and they say to
Right.
themselves, yes, this is the information is valid, the decision is sound. Uh, if I were to make this decision as a person over the course of 8 hours, this would have been the decision. Fortunately, we were able to do it in an hour. So I do think for more complex things that's necessary. Where it will be interesting to see is back to this false positives. I don't want to belabor the point, but some of those are so obviously false positive that there are now systems that can say, yes, we closed this, and because they are so obviously false positive, that's where you get a glass box. In other words, you can easily show these are the 7 programmable steps that the model followed. The model follows it every time. Therefore, this was the answer.
Yeah.
So there does need to be that distinction between the simplistic and the complex.
Right. Well, we have another question coming in from the audience. I'm still confused about what agentic AI is and AI agents versus Gen AI and LLMs. I'll just say very quickly, an AI agent is sort of a semi-autonomous, little guy. It has agency. It can make decisions based upon dynamic situation. So it's not just rules based, if then else kind of stuff. That's rules based. An AI agent, and these are very fascinating constructs. And we could talk about that a bit in our final segment here in a minute. But an AI agent is a little mini decision maker, and it typically has what they talk about beliefs. Desires and intentions of belief. It's like its database. This is what it believes is true. I believe that a SAR score of XYZ is good or bad. That can be modified over time, and then its intentions, what the plan is, its desire, what it wants to do, basically. And of course, you have to orchestrate these things. But to David's point, you're going to see, and it's already happening. These co-pilots are very, very useful for a couple things. One, banging out tedious tasks. We know you have to go check all these bank account numbers again. You have to check all this audit trail, check that. That's something that a trained AI agent could do very easily and very quickly, and you just saved your personnel an hour of time. Now you got to be careful because it is probabilistic. Some of them are, so not all of them are. Like automation, robotic process automation is not probabilistic necessarily. It's automating something according to a pattern of behavior that you're trying to accomplish. So these are different things. It all gets kind of thrown out underneath the big banner of AI. But the fact is that these AI, and what I'm hearing about AI agents by and large from lots of different people, from companies like Verint, from companies like Confluent, and a bunch of others, is that typically you want to train an agent to do a particular kind of thing, like pull in data or analyze data or publish data or do some calculation. You want them to be kind of focused in their role. I keep asking, what about the generalist AI agent? Are we going to go? Some people talk about AGI, which I don't think is ever going to happen. It's just my personal opinion. But who knows? There are people who can disagree with me. But we got 2 minutes left in this segment. I'll throw it for real quick for a comment from Jim Freis about all that. Go ahead.
So I think what David said about having the buddy is an important way to look at it. One thing coming back when we talk all about it being probabilistic, and we're getting into some pretty high probabilities that at least LLMs are correct and low level of hallucinations with every new release. But what's the alternative? The alternatives are persons. And can you imagine being a person who's doing this day in and day out every single day?
Right. Right.
Persons make errors too, especially when they're tired or they're sick or their cat runs across their screen when they're at home during COVID. The aspect, are we sure that these systems with only 99 point however number of nines are worse than a human?
Right.
That's the point where we're getting to today.
Right.
But the aspect that we've had in the past to deal with that human error is the second check. It's the supervisor taking a look or up the chain. So why can't we go into this buddy model where you have the machine do something, and at least for the foreseeable future, you still have a human set of eyes
That's
on
right.
it? But 2 sets versus 4 sets versus 6 sets versus 8 sets might be a more efficient use of our time.
Yeah, no, I think that's exactly correct, and it is the combination of things. Some of the most advanced companies I've come across are telling me that LLM use cases are still pretty much internally focused. So it is a co-pilot, it is your little buddy giving you ideas, but it's not actually talking to the customer, and certainly not talking to the regulator, not yet. I think that's going to be a good long while before the AI agents just start talking to the regulators. But they are getting pretty good. We talk of small language models. They're not so obtuse. They could be more wieldy, if you will. These large language models are downright unwieldy. But folks, podcast bonus segment is coming up next. We'll be right back. You're listening to Inside Analysis. All right, folks, time for the podcast bonus segment here on Inside Analysis. We've got Jim Freis and David Caruso with us today. And David, you wanted to expound a bit on definition of an AI agent, and you have a lot of AI agents at your company. Of course, WorkFusion focuses on designing and deploying AI agents specifically for anti-money laundering, and you could even build your own agent, I suppose. But tell us a bit about your definition and maybe what you've sought to build over there.
Well, yeah, and I just my thoughts on this were sparked by that prior question, is what is an agent specifically? And Jim has mentioned several times RPA. And so for my own purposes, I sort of wrestled with that as well. As I understand RPA, I understand fetching information, organizing information, presenting information, all of which is, arguably miraculous that machines can do all that particularly for an AML investigator who literally can spend hours a day just doing that. But where I get the distinction is the agents, in addition to gathering, they are also beginning to reason. And as an example of that, what I mean is, they can compare. I think Jim mentioned earlier in our discussion today, like peer group analysis. So an agent can say, I've gathered all this information about David Caruso. Now, is this activity he's doing different from what we would expect? Is it different from his peer group? And say I'm a small business, like I own a delicatessen. And so maybe, is my behavior different than other restaurants? So that's a level of reasoning that is beyond just simple RPA and information gathering. So just, for listeners struggling with what's the difference between gathering and an AI agent, that's how I think about it. And obviously the reasoning can get more complex than just peer group comparison, but that's sort of where that's the distinction I make. If there's reasoning involved, there's an agent at play.
Oh, that's interesting too. Jim, I'll throw it over to you. The other thing you can do here is have consensus among agents. In other words, you could have three agents, let's say, just like you have a three-judge panel, and they look at all the data and they go, I don't think so. And then the other person goes, I don't think so. The third one goes, oh, I do think so. It's like, all right, well, we got one out of three who says yes, two say no. Maybe we'll give it one last round. Let's get three new agents going, yes, yes, no. My point is, you don't have to rely on one agent. You can build consensus around these things, right?
Not just a consensus, but it's also a preference aspect. And there, I think one of the most important things that's still developing here is the use of memory, right? So if we come back from the basic foundational understanding that if I'm using one of the big LLM models, whatever the release that's currently out there, my individual query is not helping in the training of that model. That's why we have different releases, and the releases are like 10 times as much data that it's trained on. We may have some aspect of repeating the query or keeping the information in the query, but I might make a choice, and you can take it in the simplest side that among two equally correct answers, I prefer an option. And that could be just saying that I use an iPhone, so I want something iOS, even if you can give me the same option for Android. That will work just as well. You can do that within your preference range, and the ability to use a tool, and especially an agent that learns what your own preferences are, is one of the most interesting developments, both from a consumer side, also in protecting you from your release. I mean, give you a specific example. One of the companies that I'm working with has an AI agent. So instead of logging into your favorite social network platform and them asking you for your passwords to your various banks and your retirement fund so that they can do aggregation, you have the app on your phone that controls all of that. And it knows the people that you would be interested in sending funds to, or can search for you and then open up a new account. That's an aspect that will be your controlled, your own buddy type agent.
Hmm. That's cool. And that does speak to the array of possibilities here. I mean, we have all these amazing tools now. Large language models can play a role. Small language models can play a role. Basic automation. But I think in closing, David, I'll throw it over to you. What we really want to do in this space is free up the human beings to do the really hard, dense, creative, deductive reasoning, I suppose, to really understand what's happening. Because guess what? We also don't know exactly why we think certain ways at certain times. We're like, oh, I don't trust this guy. Why? I don't know. I just don't trust this guy. Then you dig deeper and you realize, oh, maybe it's his behavior. I mean, there are even facial tics and things when people blink and look down, they're answering difficult questions. Well, you might want to think twice about what they're telling you. Well, my point is that, David, we want to offload as much of the tedium as we can whether to robotic process automation, traditional automation, or AI agents, such that the people can do the meaningful work. And guess what? When humans are engaged in meaningful work, they are engaged and their mind is really working and they do good work. When they're not engaged, when it's just tedious, then that's when the mistakes start happening. But final thoughts from you. Go ahead, David.
Yeah, I mean, we're talking about anti-money laundering here. So I don't want to use too flowery of language, but there is a reality that I think about, this work around agents is we are helping, maybe in a small way, to contribute to human flourishing.
Mm-hmm.
Because a lot of the work, and I don't want to disparage anyone's work, but a lot of the work in this field is very mundane. And I think that's reflective in the fact that in these lower level roles where you're doing this rote repetitive work, there's high employee turnover. So it sort of speaks for itself. If someone joins a bank, they're thinking they're going to play a small little part in protecting our nation's financial system. Maybe they tell their family they're going to be fighting crime. And 3 months into their job, they're thinking, oh my gosh, all I'm doing all day is like copying and pasting transaction records into a PDF. Like, this is not for me.
Right.
So yes, if we can eliminate or significantly reduce that work and get people into what you sort of refer to, Eric, as that sort of flow of energetic work, that will be a really, really positive thing that AI can bring.
I love it. And maybe James Freis of Market Integrity Solutions, by the way, folks, look him up on LinkedIn, Market Integrity Solutions, James Freis or Jim Freis. Final thoughts from you, advice on people in this industry, what they can do. What are your thoughts?
Well, I think back when getting past the tedium is some things that LLMs still don't do well, and that is data visualization,
Oh,
right?
yeah.
So when we go past the aspect of single vectors, multi-vectors, X, Y, Z grid to then add colors, shapes, trends, and patterns, it's why we still have kind of CAPTCHA or pick all the pictures with the fire
Yes.
hydrant
Right.
on it, because
Right.
although the systems are getting better, there's still an ability of humans to see data in a visual way. But let us focus on those with the 6 vectors and really challenge our brain. Let us focus on the aspects that I used to do when I was in the government, when we rolled out stimulus programs, figuring if I were a bad guy, how would I try to abuse the program and get ahead of it, be
Right.
more proactive rather than reactive, always running behind. I think that's something that David and I and others who spent the time on it would love to see more of.
I love it. Well, look these gentlemen up online, David Caruso of WorkFusion and James Freis or Jim Freis of Market Integrity Solutions. Send me an email if you want to be in the show, info@insideanalysis.com. We'll talk to you next time. You've been listening to Inside Analysis.